Hello, everyone. Welcome to this masterclass hosted by Xillion. Xillion, Xillion, is your platform to help you become financially independent in 10 years or less. We have tools and financial advice available to you 24/7 so that you can make the best financial decisions with all aspects of your money, whether it's 401k investments, real estate, spending, what have you. And we help you make the best decisions with all those aspects so that you can be on your way to get financially independent within 10 years. So if you haven't, please check us out at xillionapp.com or search for us, Xillion, on Google. Okay, in this masterclass, so just a reminder, we do host masterclasses twice a week, Tuesday and Thursday at 3 p.m. Pacific time, 6 p.m. Eastern time. Please do sign up and actually log in every time because we discuss very hardcore concepts about finance that you wouldn't find anywhere else. And typically we discuss companies that are likely to become quite successful in the long run, but may not be household names right now. And in this series of masterclasses today, we will discuss Square, which previously was known as Square, but these days it's known as Block. And let's jump right in. So today we will follow one particular set of charts and graphs and data, which is available within Xillion. This is Xillion homepage, and you can create your account, get 1 month free to get all this information, and then log in and see for yourself. And once you log in, go to this product, analyze, and then search for the company that you're looking for. In this case, we are looking for Square or Block, as it's called. And the ticker symbol is Square, SQ. So here, when you click that, so let's jump into Square a little bit. So this is how you come here and search for it. But let's talk a little bit about what Square is or Block is and what it does. It's a business model. This is the website of Block. And if you think about it, it's a kind of a clever play. Square was a square, and 6 squares combined is a cube or a block. And they kind of put a little twist here in the logo, which is kind of cute. Block.xyz is the website. And Square has multiple product lines. So Block has multiple product lines. One is Square, which is the oldest and which is I would say the foundational piece. This is how this company started, as Square, as the payments card reader. Then there is Cash App, which was the second big product launched by Square, which is peer-to-peer payments. Friends splitting their bills or just sending $30 here and $50 there for an occasional car repair or something like that. Spiral is a new initiative. We'll go into a little bit more detail. Tidal is a music company that Square acquired before the pandemic, and TBD is the crypto focus. And we will discuss these 2 or 3 things in detail in due course of time. So let's jump into each business in a little bit more detail. So the Square business, which started all this, it started as a point of sale. So my first encounter with Square was back in 2009-10, just when it came out. And there was a food truck. I was in Boston, right outside MIT. There was a food truck. They had really good Mediterranean food. And one day we show up and they're like, hey, you can pay by card or cash. They were cash only before that. And I'm like, okay, let me use my card. And the lady pulled out her phone, and she actually just swiped the credit card with a little Square card reader plugged into the audio jack of the iPhone. And I was blown away. I was like, wow, this is so new. Before that, until that time, all credit card payments went through these bulky, the credit card reading machines that were, there were always like 5 wires hanging from it, and they were just so old school. And now here was a nifty device available on iPhone, and anybody can, no wires dangling whatsoever. Anybody can take card payment anywhere. And so that was my first encounter. And since then, you can see they have launched so many products. And full disclosure, I have worked with Square in the past from 2018 until 2021, end of 2021. So about 3.5 years I worked with Square. But the point of sale is still there, but it's much better than what was launched, 14, 15 years ago. And for each particular segment of the economy, there are specific points of sale for restaurants, retail, appointments like nail salons and so forth, and so forth. And not just that, look at all the products that they have. And we will go into a little more detail. If you have an online store, you can actually get your pictures taken of your products. And there's just, if you want to manage your contracts, you want to pay your employees, you want to manage the employee timesheets, you want to have your business bank, business credit card. So it is the Square part of Block has become the ERP, Enterprise Resource Planning, for the small guy, for the food truck in your neighborhood, for the small coffee shop around the block from you, or the small bookstore over there. And or a small seller selling unique goods in your neighborhood. So they have, and if they have 1 or 2 employees, they can pretty much manage all their business with Square alone. So that's the power of Square, is for any small business, they have everything that they need. And again, they diversified into quite a few different industries. A lot of focus is on restaurants, and they built like kitchen display system and so forth as well. So this is the main product line. This is still, I think, the more profit generating business line. Then the other big product is Cash App. This is, as the name says, and also, by the way, Cash App and Square are two totally separate business lines, separate leaders. They share a few things, but you can even see from the website, this is much more playful and creative, and this is much more, strictly business. So these two products are managed quite differently, even within the company, which is, I think, a great thing. So if you look at Cash App, you can always transfer money. This is how it started, pay anyone instantly. Also, they give discounts. This was a big thing that Jack pushed early on. But it's kind of a lightweight bank account. A lot of people during pandemic were able to save their pandemic aid payments right into their Cash App accounts. You can also buy Bitcoin or buy stocks or even fractional stocks. You can file taxes for free and so forth. So a lot of products within Cash App itself to engage the customers. Then there is TBD. This is building Square's attempt at building decentralized world. Really not a revenue generating, but more like a vibe shifting, industry shifting initiative. Title is music service. We'll talk about this. What it means, and Spiral, it seems this is the Bitcoin focus. We will also talk about this a little bit more. So with that, if you have any questions, feel free to ask, but if not, I'm going to jump right in and talk about the numbers for Square. So let's start with, so again, as I said, you can go to analyze product within Xillion after you sign up. Search for Square or Block, and you will see here. So overall performance, if you look at it, last 3 months, the stock is down about 16%. 6 months, it's up barely, basically level. It went all the way to almost 85 at one point. So it touched 52-week highs and then came back down. Year to date, a little bit down. 1 year, barely up. 3 years, down significantly. And I still have my stock options, RSUs that I got from 2 years ago. I'm a long-term investor in Square, so I'll hold for a long time. 5 years, you can see the jump, the COVID bump, and then the COVID crash right here. And 10 years is, you can see it was, Square actually IPO'd in 2015, end of 2015, which was not a great time to IPO Just like today. Like today is not a great time to IPO. Last couple of years have not been very kind for companies to IPO. That's why there have been so few IPOs. 2015 was similar, and you could buy Square stock for less than $10 at that time, and which by today's standards means Square was a $4 or $5 billion company at that point. But then, 2018, there was a rise. But what I want to highlight is today, the price is where it was about 6 years ago. So Square, even though it has grown by leaps and bounds in terms of revenue, profits, and so forth, the price is where it was 6 years ago. Something to keep in mind, which we'll double down in a little bit again. Okay, now let's look at overall market cap. It's a $40 billion company. And the potential, I think, is much, much higher. We'll go into that towards the end. Look at the performance overall 3-year, really, average. For the last 3 years, it's been a consistent slide since the COVID highs. 5 years, the stock has barely budged. So if you believe in the long-term growth of the company, I mean, you can buy Square from 5 years ago today. That's the way to look at it. If you think it'll be a great company in the future, today you can buy it at 5-year ago prices. So it's a pretty hefty discount. 5-year annualized returns are lower than 56%. Fintech is in really bad shape. Square, PayPal, all those companies are not doing great in terms of overall stock market. That's probably one of the reasons Stripe doesn't want to go IPO anytime soon, because in this market, you're not really getting rewarded. Bill.com, Adyen, they've kind of not gone anywhere since the COVID highs. Looking at the valuation overall, price to sales ratio, look at this, 1.76, which means for every dollar in revenue that Square makes, its market cap is only 1.76 times of that. So Square's revenue is over $20 billion, but the market cap is only $40 billion. So very cheap in this sense. This is cheap. It's lower. It's cheaper than 86% of its peers. So that's how cheap Square is right now. Price to earnings. Square is a growth company. Price to earnings do not become really a metric to look at, a healthy metric to look at, until a company stops being a growth company and becomes steady eddy cash flow kind of business, where it might want to buy back its stock or pay a dividend or things like that, or maybe acquire other big companies. But Square which Square did buy Afterpay, but that was COVID. So that's why it's not a great measure at this time. For reference, long-term average for S&P 500 price to earnings ratio is about 15-16. Right now, market is a little frothy. We are at about 20 to 21, somewhere around that at this time. So overall, based on these metrics, Square is on the cheaper side at this point. Growth. Square has seen tremendous growth in the past, but a slightly sluggish growth since COVID. Part of the reason is the growth accelerated so much during COVID. And this has happened not just to Square, but so many companies. I mean, Zoom is a perfect example. So much growth happened during COVID that 10 years worth of growth, maybe 8 to 10 years worth of growth, happened in those 1.5, maybe 2-ish years. So now a company is kind of stagnant because of that. But despite that, quarterly growth is about 20%, which is quite respectable. 5 years, if you look at it, which includes the COVID period, so you can discount it so much, a little bit, but it's 50% growth compounded for 5 years. That's really, really good. And if we go down here, and again, you can look, 5-year EPS growth is, again, they're not focused on earnings. So earnings per share growth is lower than 90%. But overall, they're growing fast. They're growing faster than 67% of their peers, right? Slower than 33%, but faster than 67%. Now, let's look at profitability. As I said, so net margin is low. That's because the company is investing all its profits into growth, which is the right thing to do for a company at this stage, very young company, 14, 15 years old company with launching new products all the time. Gross margin is 33%, which is typical of a company in this kind of space, which is payments. The good thing here is payments are always a low margin business, but Square, by offering all these value-added services on top of that. So for instance, if you are a retail and you want to, or a beauty service or something, you buy payroll. And to buy payroll, you pay some money to Square and you pay every month. Now, all of a sudden, this is software revenue, right? And $35 a month, you're a small business, you can actually run your payroll. Now, this money is a much higher margin business. And Square has been very good at growing its software portion of the revenue. It's always growing faster. When I was there, I was also involved in some of those initiatives where we were working on building the software as a service, the SaaS, as we call it. And monthly subscriptions, they're a gold mine for any tech company. And that's what Square has been focused on. Margin lags behind 89% of its peers, but its peers also include the pure play tech companies, which always have 80-90% margin. But from a payments standpoint, this is not a bad margin, especially with software mix continuing to grow over time. Operating margin, the company is really not focused on making a lot of profit. Once it does, it will likely be inducted into S&P 500 once it does it for 4 quarters. I expect it to happen in the next 3-ish years or so. So we'll see how that goes. Okay, now let's look at some of the other things, right? We have looked at the numbers. Actually, we'll come back to this, but let's continue looking at the numbers in a little bit more detail. So this is Square's revenue, and you can see when when Square went public, it had about $1 billion in revenue and about $5 billion in market cap, and it was growing at 50%, consistently around that time, growing at 50% for many, many years. This is the growth I was talking about. All of a sudden, in COVID, Square is now growing at 100%, 80%, and then 2022, growth stalled. And we'll discuss that. A lot of this was driven by Bitcoin. Bitcoin revenue fell off the cliff in 2022, and you see that. And then again, a healthy growth in 2023 and beyond. And you can see the growth was negative in 2022, but turned positive at a healthy clip in 2023. Any growth number over 15% is considered fairly good. For that's a high growth trajectory. Over 20%, solid growth. A company is likely to do really well in the long run if it continues to grow for 20% for a decade or more. Now let's look at the more granular quarterly metrics. And this is, you can see consistent growth before COVID and highly accelerated growth during COVID when everybody was buying Bitcoin and stocks and everybody was spending money on restaurants and eating out and ordering in and so forth. And then you see the post-COVID crash. Quarterly revenue dropped 22% in Q1 of 2022, and then barely started growing from there. But good thing is it's growing, right? 20%, 24%, 25% growth. Now you can see again the growth that Square enjoyed in the years before COVID. It's kind of coming back. Even though it was at slightly higher clip of 40-50%, but now it's at about 20%. But given that the quarterly revenue is already at $6 billion, so quarterly revenue run rate 25 to 30 billion, that's a pretty healthy clip to grow, rate to grow at 20+%. Trailing 12 months, this is a very healthy way to look at a company. And you can see there was some the COVID related thing, but overall, trailing 12 months, a consistent story of growth and execution. Let's look at gross profit. Again, it's making a lot of profit, $7 billion last year in gross profit. All of that going into the business, growing the business, which I think is the right thing to do. Quarterly, again, $2+ billion, so a run rate of around $8 billion. That's very, very healthy for a company. Operating income, again, because the company is investing most of the profits into growing its business, not super high. Price to sales ratio. This is an interesting chart as I was looking at it, and I want you to pay very close attention to it. Look at this when Square went public all that time ago, and its revenue multiple, price to sales ratio was about 2, then it climbed to like 4, 5, then it became kind of Wall Street darling around 2018, and then it crashed a little bit, jumped again during COVID, and everything jumped. And now look at this. This is, like last September, October the stock was really, really cheap. I think it dropped like $40. So price to sales was barely above 1. For a high growth company, that's unprecedented. And even now, if you look at it, 1.79, the last time you saw this ratio was more than almost 9 years ago when company went public. So Square is really cheap according to this metric. So if you ever thought of buying Square, this might not be a bad time, because you can get in at a price that is about 5 years ago, or maybe even 10 years ago, if you look at this particular metric. PE ratio, not really good to look at right now because the company is not focused on that. Okay, we've already discussed the margin, so we're going to skip. Now let's talk about what we think overall about the company. Right? We looked at the metric. So one is, Square is a solid business, but any business is really determined, the long-term success of any business is determined by the leadership, because leadership attracts talent or sometimes repels talent, great talent. And if you look at Square was started by Jack Dorsey and Jim, both St. Louis natives. And they started, kind of like a passion project. And Jack has been the CEO since. Jim has been the board member, pretty active in that. Brian Grassadonia, who leads Cash App, he has been with the company from the very early days. He actually was the one who built, Cash App in the beginning. Built in the sense he was the first product manager. Jack also co-founded Twitter, so a lot of experience in building a tech company, leading a tech company, inspiring a lot of people. I worked at Square, and if you listen to Jack giving a talk to the company during all hands or something like that, I can tell you from first-hand experience, it's very inspiring. He's a true visionary. He does come across as someone who is poised, someone who can think long-term, is not distracted by the day-to-day things, and he's always like, hey, let's focus on the future, far future. So overall, pretty good leadership. They also brought Amrita, since the last CFO left for CEO of Nextdoor job. Amrita has been wonderful, and also overall, pretty good leadership that has stayed in place. And any company where founders stay after the company goes public and continue to build tends to do really well. Jack is there, Jim is there, Brian is there, and there are a few other people who are long timers and still at Square. Very, very dense overall talent that's still there. So they'll continue to do well in future. Now, an area of concern is Jack is a visionary, and sometimes his visions are a little hard to understand for ordinary people like you and I. For instance, his deep faith, immense faith in crypto. Okay, that's great. That's brave. That has gotten a lot of revenue and profits for Square. But what if in the long term it's not as promising technology or a medium of storage, value of store as Jack thinks it is? Then it could be a potential downside. Square bought Tidal. which could be a Muzak for all the small businesses, but hasn't been a true integrated product within the block ecosystem, the Square ecosystem. So, those are some concerns. That's why it's 4. Otherwise, this leadership, in and of itself is 5 out of 5. But because of these couple of concerns, it's 4. Product diversity. We went through the products. Both Cash App and Square offer so many wonderful products for consumers and for small businesses to run their, to live their financial lives, and that I think is a true strength. The reason it's 4, not 5, is because Square hasn't done as well outside of, specifically outside of America, US. They did launch in a lot of English-speaking countries like Australia, UK, also launched in Spain a while back, but hasn't had great success. And I think tech companies, if they don't launch international soon enough, local players can come to dominate that. And Square should pursue that. And that's why it's 4, but not 5. Square's pricing, I showed you, it's very transparent. You buy, if you just want to do payments, there's a very transparent thing. If you want to buy software, it's very transparent. For a small business, that is really, really important. I'm almost willing to give it 5 for this, because a small business doesn't have to engage with a lawyer to understand what the pricing is, to negotiate and all that. They're like, hey, listen, I'm willing to pay 3% or 2.75% for all payments. Done. And not just that. I mean, one thing that not many people are aware of is, if you're a Square business customer, Square can offer you a loan, and you don't even have to walk to a bank or talk to a bank. Square will analyze your data, how much sales you have, how much profit you have, all of that, and applies its machine learning models, AI models on that. And then it'll say, hey, listen, you are eligible for a $12,000 loan that you can pay automatically over the next few months. And all you have to do is say, accept. If you accept, that money is in your account. And let's say you're a food truck owner, and you're like, okay, $12,000, maybe I can expand and buy another food truck. And you can do that, right? And Square lets you do that. So it frees up the time of the business owner and helps them grow their business. So those products, they are actually making a lot of money, and they actually are very, very good in growing the ecosystem, growing the profitability of the company in the long term. Okay, so we went through a lot of information. Overall, where do we think Square is headed? The worst case scenario for Square is it becomes PayPal, right? PayPal has a consumer-facing peer-to-peer Venmo and just PayPal. And also PayPal was the initial kind of pioneer in small business accepting payments online, and also started offline. So worst case, Square becomes that. PayPal is, I don't know, $50-60 billion company now, even though they make a lot of revenue. And worst case scenario, Square remains at this kind of price to sales ratio 1 to 2, maybe 3, and becomes a kind of a middling fintech company. The best case scenario, in my opinion, and again, I'm a little biased. I've worked at Square, and I also own Square stock, and I'm holding it. I barely sold any since I left Square. I think the best case for Square is I would say in about 15 to 20 years, Square becomes the modern JP Morgan. That I think is the best case scenario. It becomes, a $400, $500, $600 billion company in terms of market cap, because it can grow its revenues to maybe $150, $200 billion over the next 10 to 20 years. I think that's the best case scenario. Now, we're going to be somewhere between the worst case and best case. I'm more leaning towards the best case for the long term, but happy to hear your thoughts. If you have questions or thoughts about this, please feel free to drop a note. Wherever you are consuming this video, please drop a note, and I would love to hear your thoughts. So that was all. Next time, we will cover one more innovative, lesser known company, and please do join the Masterclass. We actually hold our Masterclasses every Tuesday and Thursday at 3 p.m. Pacific time, 6 p.m. Eastern Time. Do log in, ask your questions or send your questions beforehand as well. And if you ever miss it, you can actually find all our masterclasses on YouTube, search for Xillion, or even on our own website. If you go to resources, and you will find us, you'll find all the masterclasses right here. Thank you so much, and I'll see you next time.